Do you know that if you do not file your tax audit report, then you may be levied a penalty of up to rupees 1,50,000. So it is very important to file your tax audit report. Now in this video, we will discuss who is required to file a tax audit, what are the limits pertaining to it. Hello everyone, welcome to KCC channel. I am CSMD Bhatnagar. So what exactly is an audit? Audit is a mechanism in which the auditor goes through the accounts, he checks the accounts, verifies it and sees whether any violation as per the regulations, as per the law has been conducted by the organization of which it is conducting an audit. So audits can be of various types. It can be statutory audit as per the company law, it can be forensic audit, it can be internal audit, and it can be a tax audit. So in this video, we will discuss about the tax audit. Tax audit is a mechanism in which the tax auditor checks whether the accounts are compliant with the income tax provisions. If there are any violations, then these are to be reported to the management and the management is asked to comply with the requirements so that there is no violation of the income tax law. So as per the income tax, the tax audit has to be conducted by a chartered accountant only. Tax audit contains a reporting mechanism in which the tax auditor reports whether the books of accounts are properly being kept and there is no violation as per the income tax law. And if the violation is there, then he has to report the violation in its report. Then there is a second part, which is the annexure to the report, in which there are various clauses, and those clauses contain the provisions of the income tax law, and in each provision the tax auditor is required to state whether the facts and figures being reported are correct or not, and if there are any violations, it is being mentioned in the annexure to the report. Now let us see what are the limits of the tax audit. If you have a turnover of more than 1 crore, then you are required to get your accounts audited. And in the case of a professional, if your turnover exceeds 50 lakhs, then you are required to get your tax audit done. Now this limit for the businesses of 1 crore goes up to 10 crore if you meet certain conditions. What are these conditions? If you have cash transactions which are less than 5%, if you have receipts which are 5% or less of your total receipts. Secondly, if you make the payments which are less than 5% of your total payments which are in cash. That means that if you are digitally making the payments of 95% or more, similarly if you are receiving money which is 95% or more in a digital mode, then you are covered with this condition and you are not required to get your accounts audited up to rupees 10 crore when your turnover is reached. So now the question comes that we know about the presumptive taxation scheme. In the presumptive taxation, the limits are 2 crore for businesses and 50 lakhs for the professionals. That means that if you are an individual HUF or partnership, because the presumptive taxation is available only to the individuals HUF and partnership, then you need not prepare your books of accounts and the question of audit goes away there by itself. So if you have a turnover of less than 2 crore and if you are a HUF individual or partnership, then you can report 6% or 8% as your profit and you can pay tax on that without preparing your books of accounts. Now the 6% or 8% is the limit. When you have your digital transactions, then your limit is 6%, and if you have cash transaction, then your limit is 8%. Similarly, if you are a professional and if you have a turnover up to rupees 50 lakhs and you declare more than 50% of the turnover as your profit, then you're not liable to prepare any books of accounts, and you have to simply report 50% of the profits and offer that for taxation. Now, if your profitability is less than 6% or 8%, as the case may be, in the case of business entities, then you have to get your tax audit done of your books of accounts. So in that case, even if your turnover is less than 2 crores, less than 1 crore, less than 50 lakhs, whatever, then you have to get your tax audit done. Similarly, if you're a professional and if your turnover is less than 50 lakhs and if you're declaring profit less than 50% of your turnover, then again you have to get your tax audit done. Now, in the recent budget, there have been a few changes in which it has been allowed that if you have less than 5% of your cash transactions, that means your digital transactions are more than 95%, then in the case of a business, you can opt for presumptive taxation up to rupees 3 crore of the turnover. Similarly, in the case of professionals, you can opt for presumptive taxation up to rupees 75 lakhs of your turnover. So this is briefly about the tax audit limits and what the provisions contained in the income tax. So if you find this video interesting, please give it a thumbs up and share the video as much as possible and consider subscribing to this channel. Thanks for watching. See you the next time.